Hi and welcome to the Market Alert for Friday, the 9th of June 2023. So happy days. Buy the dip stays intact. As far as yesterday is concerned, the market's moving to the upside. S&P entered a bull market and tech outperformed as yield declined due to spike in initial jobless claims. Now the jobless claims you would have thought was a negative of the market, but it wasn't. It just allowed the market to move to the upside. So there you go. And also China's persistent gold accumulation, a 7-month surge in holdings, as holdings in US treasuries declined by the Chinese as well. They want to offload as much as possible. They used to hold close to $1 trillion worth of US treasuries, but they have been getting rid of them. They no longer want them, so it doesn't bode well, but that's it. Economic news for today. Well, there's nothing today, so the market's going to make its own way, and I suspect that's going to be to the upside after an initial sell-off, and there's nothing to stop the market from moving higher at the moment, is there? It's been sideways this week, but sideways to higher. Okay, let's move on, have a look at the markets, individual markets, and we'll kick off with the Dow. So in the Dow, you can see prices trading up to the 78% retracement from here down to the low and then back up. We need to take out the level of 78 and then the 89, and then we've got the 34,261 on the upside there. If we do happen to move to the downside, and I like to cover both bases because that's what the markets do, they go up and down, then I've got some targets on the downside where the market's likely to find some sort of support as well. 30-minute chart, you can see yesterday just continuing to move to the upside once the Dow opened. Never stopped till the close, and that was 281 points. It looks more, but that's what it was yesterday. And in the morning also moving up 100 points, back down 100 points before the open there, and then moving up. So we're a long way off yesterday's low. The high is closer and we're above the DP, so those probabilities alone say that we're likely to attack yesterday's high. If not, then we'll come down and have a look at the DP and the 50 EMA. And if we break that, then we could head down. But I very much doubt it, given it's a Friday as well, because that's not generally the pattern for this market. In the implied volatility, it's getting very interesting now. We're down to 11.14, and that's because the market's quiet as well. But also, as the late David Kaplan said, when the implied volatility becomes quiet, then you can expect an explosive move from this type of activity. And in the case of the Dow or the stock markets, it's to the downside. So the lower this goes, the better. It sort of preempts it. And in the monthly one, let's have a look at the longer term. You can see there, 11.14. We've not been this low since 2020, which was just prior to the COVID pandemic. Let's just have a look, see if we can grab a date there around that sort of time. It was about November 19 before the last time the market was down at these levels. We've got another one here. What's that? 9.96. So you can see pre-COVID that we used to get down to around 10 and 9%, but that changed post-COVID. They printed a lot of money and the volatility obviously spiked up. Then the Ukraine war, then the cost of living, inflation, and so on. So to be down to 11.14 is very, very important. So the question is, how much further up will the market go before it runs into trouble and we have to have a correction? It happens every time. You can just see by the correlation of these points and the market making the corrections. And outside of COVID, exactly the same thing. You'll see these small corrections, and those small corrections are on average 2,000 to 3,000 points where the Dow is concerned. In the German DAX for yesterday, also trading below Tuesday's. And in the German DAX, we can see prices trading below Wednesday's low, but then managing to rally all the way back. Struggled a bit overnight with the 50 and 62, but let's look at this in more detail. So yesterday we had the shakeout below the low, and if you will see this in more detail in a moment what they actually did, and then they brought the market back one-way street all the way back to the DP. Again, these sort of, when the market trades below these important levels like the low and whatever, they're just shaking out the stops and also trying to wrong foot traders into going short, thinking the market's going to continue, and then they bring the market back. And then, of course, in the afternoon, you see the DAX moving up with the Dow. We're miles off the DP at the moment, and we're a lot closer to yesterday's high, which will be achieved, no doubt, either at 7 a.m. or at 8 a.m. when the cash market opens. In the 5-minute chart for yesterday, you'll see this action here where they dropped the market in the future session. They dropped the market below the low of Wednesday. We had one bar of selling, the next one was buying, and they brought the market back, and that's the way it remained for the duration of the morning. The market pulled back mid-morning, as you'll see there, ready for the Dow, back to the 200 MA. Again, same thing happens. They take it through these levels, then they'll bring it back, and you see then the market moving back to the upside there. And overnight price is way above the DP at the moment and sitting above the close. So the 5-minute DAX showing a positive for the futures when it opens any time now. So yesterday's profits were 197.50, 3.9 profit factor. And we had an 80-20 win-loss ratio yesterday. For the week now, we've topped the 1,000, 1,031.50, 394 on the profit factor, and 71.29 as can be seen. Well, it's actually 70-30, isn't it? So, yeah, a good week so far, and we've got one more day, and I think it's just going to be a one-way street today because past performance is that there's no economic news, and the market doesn't like to go down on a Friday and give anybody indigestion over the weekend. So it doesn't mean to say it won't, but if you were to have a scale of probabilities, there's a good chance it's going to be 70-30 as far as that's concerned. And in the S&P 500, the market reversing yesterday, trading back up towards the high of yesterday. We'll look at the 30-minute chart to see this. So it came within a stone's throw of the Wednesday high, but didn't quite manage to take it out. Again, we're above the DP, bullish. 50% retracement is also there. We just need to get back above the close and then attack yesterday's high. Yesterday's price action, again, that classic in a bull market, coming off the low, even despite the fact that we went through it. And then you can see again, even though they test and shake out weak traders, take the stops out and then move the market in the opposite direction. In the UK 100, down day for the UK, as you can see there, closing below the 5-bar moving average, stuck in a sideways range. In the 30-minute chart, you can see that we spiked up in the morning, then traded down to the low. We came off the low, got stuck at the DP, and then traded back down, and then they tested there before coming back with the Dow. Again, overnight, for market direction today, the market is already above the DP, it needs to stay above, and if it does, takes out the 200, good chance we'll go to yesterday's high. Conversely, if we break the DP, we head down towards the low there. And in the currencies, GBP JPY taking out the high at 174.673. In the 30-minute chart, you can see this yesterday driving through. You need buying to go through the highs, and that's exactly what happened. And we're already at the R2 for this market. So if you trade this market, watch the R3 because 90% plus the time the market is likely to stop in this area. Meanwhile, in the pound dollar, you can see the big move yesterday. This means that the dollar must have fallen, which it did. And you can see we're through that 62 from the bigger swing from there down to there and then projected back. 30-minute charts, one-way bet after those claimant count numbers. And again, coming off the DP, retesting and then moving higher there. And in the US dollar, you can see yesterday down and closing below the 20-bar moving average, the first time for many, many days. So that's interesting. It'll be interesting to see whether the market can actually come back 89% retracement as well. Obviously waiting for next week's CPI numbers and also the announcement from the FOMC on Wednesday. And in the metals, big move yesterday for silver to the upside, trading up to 50% retracement at 24.29, more or less. So 50% retracement so far of this current correction. 30-minute chart, you'll see the market reacting to those claimant counts as prices found support at the 200 MA and the DP. In the gold market, also moving higher as well, but sideways overnight, still stuck in the sideways range. And interestingly enough, just take a mental note of that picture compared to silver. Silver moving up a bit more sharply there than gold. And you can see the reaction to gold there, but it's still not in percentage terms the same as silver, which can be seen by the gold-silver ratio. And it's plain to see because you've got the gold-silver ratio dropping back down to 80 because of the percentage move compared to gold yesterday in the silver market. Okay, that's the end of this one and for this week. So enjoy your weekend, and let's see what the market has in store for us today as they get ready to open. So with that, I will conclude, and as ever, thanks for watching. See you in the next one.